Welcome, everyone. Gonna see who we have here. Press one if you can hear me. Really looking forward to having you guys here in the chat today. I'm glad you guys can show up. Definitely looking forward to our class today and what we're going to be covering in terms of improving our decision making and working towards a better consistency score when it comes to our trading. And so the title of this today is Think Less, Trade with Decision. And we're going to be honing in on the ideas of options optimization, as quite a few of you may come into this expecting and wanting to know more about how we have a better handle on this. All right. So welcome in, everyone. Let me know where you're tuning in from. Rep your city, rep your country. This is World Cup time as well. Let me know if your country's still in the mix there. Let me know where you're tuning in from, state, city, rep it. All right. Glad to have you guys. All right, all right, all right. So we can get started here. So today's class is going to focus in on how we accomplish and make our way towards making better decisions, how we are able to navigate the spaces where our decision making is at risk when it comes to trading, and how we best approach this from a factor that it enables us to be able to shift our perspectives and execute with more consistency as we're naming each piece here of our processes. All right. So that's going to be a big area here that we cover today. I just want to make sure that you guys are all ready and all situated, such that we're able to accomplish this and move even further with what we have as we're navigating our full process here. All right. So just laying a few more people through the door. So I'm just seeing people funnel in. So glad to have you guys. Thanks for joining. Thanks for joining. I just want to make sure that everyone is here and situated. All right. Hmm. All right. So the main thing that we're covering today, and I really want to make sure that we are taking advantage of this moment. All right. A lot of us that brings us here or continuing on the trading journey is knowing that we have the opportunity here in trading and that we can do this, right? But as we're navigating each emotion that we experience along the way, how do we speak to those emotions as they elicit when we're scrolling social media, scrolling past screenshot after screenshot, having great trades of our own, but how where we can't keep up, right? Seeing someone else's performance, comparing ourselves, everyone posting the same green P&L like it means something, right? And where we might sit trying to figure out what is our system and when it's going to be our turn. The side of confidence, the side of making sure things are sticking, and getting to the better understanding of why strategies are failing the second that real money is there on the line, right? So, what we want to do is stop with any of the defeatist thinking. What I'm going to tell you is that trading isn't about your strategy. It's not about how much you have. It's not about how many hours that you stare at the chart. It's about the decisions that you make and how efficient those decisions are when the time matters. That's the whole thing. And as I've talked to thousands of traders over these past 6 years, and as I've really engaged with those profitable traders, all of them that I've ever met, we've had conversations and they go to admit that the same thing, if you put them all in a room and ask them honestly, it really came down to fixing our decision making and removing the guesswork. The setup never saved anyone altogether. And we're going to be covering setups, right? It's just that the setup is only 10%. Learning the strategy, navigating any of these tools and softwares, I want to be able to demonstrate for you guys TradingView and what we can accomplish there. That's just 10%. The decision making is what is the main mover of portfolios, of progress, and more. And so if you're tired of pretending that, any of the minutia is going to fix itself next time you read another book or just make another follow, I just want to give you this next hour of my time. I want to be able to teach you the decision framework. I want to give you guys some goodies as well, some really great free resources, and how I've taught this framework to now 40 of my mentees producing 5 to 10K per month consistently. All right. It's the same framework. I was actually able to attain the 10K trade today. This is the same framework that through these past couple of weeks that I've able to demonstrate with student after student with executing in this specific way, such that this produces real results. All right. So by the end of tonight, I want you to walk away with a few things here. First, a name for what's actually breaking in your trading. I want you to be able to name that gap. Secondly, I want to be able to configure 3 shifts in perspective. I'm going to demonstrate the framework live. I'm going to demonstrate first the LVL framework setups and more, but more so about how to configure your decisions more effectively. And then a final decision for you for how to navigate and push this along as we go through with your trading journey. So if you guys are ready, put I'm in the chat. If you're ready to listen, get this going. Let's get into it. And so a little bit about me. If you, a lot of you guys are familiar with my story. If not, if you're new, let me know. Press and in chat, if you're a new watcher, if you've been a casual follower, maybe from Twitter, Instagram, any of those, let me know. I definitely love to, know who I'm crossing paths with, and it's because it's a really small world. I stopped trading in 20, or I, excuse me, I started trading in 2020. In March, during the pandemic, I, learned a lot through videos, Discords, courses, and I lost a lot of money a lot around that time, but I actually attained a really huge win, starting with $200, and scaling that to actually 6 figures within my first year. It's I'd say it's a bit of a misnomer, or rather like a rare story, but you start to learn that the opportunities in trading aren't as rare as you think, or in that those opportunities aren't that far away. But what happens shortly during that time, after that time, it's about the slow drift. away from those euphoric moments of when you touch this great opportunity that trading presents, that your relationship with your P&L starts making you perform worse. And I'm not losing because I don't know enough information. A lot of us know a lot of the components here of trading. Um, it's really about how you're losing because every single decision that I was making was in the moment, when money's on the line, when the heart rate is going up. And oftentimes it's in the moments when trying to win it back. What I've produced, and even some things that I came into today's class, had been thinking about was that there's really a stronger approach with the ability of a trader to perform when they aren't operating from the mindset of the deficit that they have to make back. Because of often deficits are what prioritize in our mindsets that influence our decision making for how much longer we should be holding a trade, how much more money we should be putting into a trade, how fast we want to attain that goal of climbing back and fixing whatever damage may have been done. But the when I recognize that trying to fight that, trying to discover strategy after strategy, knowledge base after knowledge base. Um, Once I sat down and decided in advance when every decision was going to be, that's when everything changed for me. And that's when I recognized through mentorship, through problem solving, that narrowing down the strategy was essential such that the decisions themselves could actually thrive. All right. And so the biggest domino I want to cover for you guys today is that better trades aren't coming from better information. You might be feeling that, you might be working hard in that way. And that may have been your journey to this point. Better trades are coming from pre-made decisions. All right. So as we are collecting strategies like Pokemon, as you're joining, different groups, watching so many videos and more, it's good to achieve and accomplish that information, and you need to be proud of yourself for that commitment to learning. But if the trades aren't improving, that means that you've probably learned enough. In the sense of information, when you have to do additional learning and experimenting and testing has to be with those decisions that you're making before the trade even happens. All right. And so I'm going to give you that name for that. Some of you may have heard that name before, and that is discretionary decay. You have a finite battery every single week. It charges on Sunday when you prepare, but then it drains every single time that you make an undefined decision during market hours. All right. And so what that looks like is here on this slide where you're thinking through each decision. And in trading, you have to make a ton of them. That's why only 10% of traders stick with it, only if they know this and recognize how many decisions happen. Where do I enter? Where do I exit? How big do I size? Do I move the stop? Do I trade or skip it? Every one of those questions, if you haven't pre-decided that, it is draining the battery. By Thursday, you're running on 12% and wondering why you took that revenge trade. Why did you FOMO if you didn't get the result you wanted earlier in the week? Why did you FOMO into that trade by Thursday or Friday? And now you're spending the weekend thinking about Monday to run this all back again once that battery is recharged. So the fix is not more willpower. The fix is in moving the decisions out of market hours and having pre-planned and recognition for every one of those decisions. All right. If there's anyone who's newer here in trading, a lot of components are going to be of this presentation are definitely more geared towards those who've had this the season to understand and engage in practice in these areas. So it's really going to matter more about where you sit when you are making these real trades. And they have to be real trades because the difference between how we've navigated the practice and early stages of our trading and where we situate now through the great moments, the worst moments, and the in between. And so, what I want you to hear, because what this and what matters here typically is that a lot of change happens across 30 days in the management of your decisions. And that's not going, this is these changes, we're going to make a solid note on exactly what changes need to come as a result of how we reframe our decisions. But you just have to understand that this takes time, but it takes a specific layering of each component so that you have intentional experiments with your decisions, your risk management, and being able to actually track all of this. Anything that I'm saying, it can only be applied and you see progress if you're actually tracking it. I think it's easy, especially this is a free session. I don't want to undermine that this is a public space and we get to engage and ask questions. It's very easy to just kind of hop on here and, listen to essentially what I have to say, right? But there's a level of seriousness and commitment towards making a real stamp on your portfolio, on your progress and financial future with trading in the midst that that can't be understated about that time, that commitment, and the honest view. I really want to share that, and anyone who has known us in the community and longer understand the amount of work that we pour into the traders in our community, the questions and leading questions we want to ask to help you consider even harder how you're navigating in your next stage of your financial future, whether it's trading, AI, e-commerce, whatever it may be. But that's really where we want to certainly emphasize that we can work directly with you and teach these components, but it's going to take that extra level of effort. And that typically sits in these phases where we start with that seed phase where it's about uncovering which decisions actually are there to strip back the layers of such that you can get a better sense of the ones that are positively benefiting you and decisions that and behavior habits that tend to impede your progress. That's typically what the first 30 days of that happens. Oftentimes there's a growth phase that follows afterwards that then you take those findings and then apply it into a way that you can develop some real outcomes for your portfolios and for the consistency that you're looking to find and set in stone. And then lastly, following that is how we scale, right? And so I want to be able to walk through a couple of these here in today's session so that you are able to walk away knowing that pathway for yourself. And so as we transition here, the first thing I want you guys to start to think of differently or consider highly importantly in your trading is with this question. When you take a trade, how do you know it's a good one? And so if we're being honest, most of you are looking at the chart, right? You see a pattern, whether it's a bull flag, a breakout, double bottom, reversal candle, right? And something that looks like every great setup that we've seen, whether it's something that you've learned from myself, other teachers, and great professors in this space who have led traders to take this space seriously and consider it in a simple way. We think, hey, this looks clean, I'll take it. It's definitely a decent approach to making trades, but that doesn't answer the question of how do I know that this is a good one? And this is a good one that is right for me. How am I fitting myself in the market? That by itself, by just looking at a chart, it's not it's not enough information to say that's a quality trade. At that stage, it's just a familiar looking chart. And so, what every profitable options trader will tell you about a quality trade is that a quality trade is one where the reward measured from your entry to your pre-mapped exit is significantly larger than the loss, right? Measured from your entry to your preset risk level. And so this is decided before you click buy. Just like we mentioned at the start of this presentation, it's about the decisions we are making before the trade even happens. That is majority of the work that even determines whether we're going to be profitable or not. After 7 days of trading, or excuse me, after 5 days of trading each week, what determines if we're profitable or not? A lot of it lies there with a lot of that pre-work to handle those decisions, because most of our losing trade weeks that you have to recognize are because of the lack of planning and measuring of your decision-making health and how that deteriorated over the course of each week as we're making decisions at the moment of the trades happening. Figuring it out on the spot where your emotions, your signals, your levels of chance and probability are all fighting you at the same time. One thing to say, and you can screenshot this page if you haven't already, I want you to notice what's not in this definition right here. The pattern, the candle, the indicator color, right? The guru who called the setup. None of that matters unless you can answer two questions. Number one, if I'm wrong, where will I know I'm wrong? And how much will I lose? A simple thing that a majority of us fail to do. We think that we know, hey, I'm going to put this much money in this trade. That's how I know this is the amount of money I'm putting in, right? But we don't actually sit down to assess what is the risk and how comfortable we are with the risk that we are actually taking. And so that risk assessment, as we're going to cover today, becomes a huge component of all of this. The second thing, after first, if I'm wrong, well, I know I'm wrong and how much will I use? The second thing is if I'm right, where will I get out and how much will I make? All right. If the second number isn't significantly bigger than the first, that trade should not exist. So this is essentially visualizing that for us. So this is essentially the same chart, right? If we just looked at this chart on the screen as we have the line chart for an options trade of sorts, right? On the left, we might have just some chart and we say, oh, the entry looks good. I guess I'm going to take an entry here, right? But the problem is that we take an entry at market price, right? We have no idea where our stop level is or what our risk amount is. We have no target. We just want to enter a trade and hold it until I guess it's no good. But what does that even mean? What is the target, right? What is that measure that actually gets us out of the trade, which is way more important than us even entering. Where we exit is way more important. And that's something that we have to learn. And so, as we would expect, or maybe where we have no expectations at all, the outcome itself is random. While on the other side here, if you have your defined risk where your entry is predefined as a specific price, you have a stop, whether it's below a specific level or just preset. And then you have two targets at prior price levels where value has already been proven. That determines your probability of even winning the trade. And where you learn and leave out with is the ability to have that information beforehand to then determine, hey, I know that this is the likelihood for me to have this outcome for me in my trade. And it's not random. I actually preset it. I can understand it. And I can certainly, you know, assess this. And where it doesn't feel like I'm fighting for my life with how I'm navigating the next step, what what trade, what strike, what expiration, whatever, that is. Like I'm not fighting that at the very moments that I'm making the trade and that throwing me off. So what comes down to the test and what I want you guys to then assess for next week and for this upcoming trading week, before you click buy, I want you to write down three numbers. All right. And I'm going to post this here in the chat. And I want you guys to have that down. As you're trading this trading week, write exactly where, if you're finding any trades before you click buy, write exactly where you'll be wrong, where you'll exit if you're right, and the ratio. How to calculate that ratio, what I'm also going to drop here. I want you guys to have this resource directly from me. I'm going to drop this in chat, this free resource. This is a full-on guide here that outlines exactly all the components that go into making a high quality decision in any given trading day. All right. That's what I want from me to you. It's something that I put a lot of effort into designing, into making sure through all the decisions I've seen traders make over the past 2 years, really refining through the thought processes, how to handle those when they come up in trades, and how to pre-plan them. So that is yours. Some of you may already have it, but especially for those who don't, I want you guys to commit to actually studying this document and applying this in a real trading setting. When you are looking for trades, if the win, when you are deciding number two, where you'll exit if you're right, if that level isn't at least 2 times where you're wrong, then you simply don't take the trade. That single rule, even if you don't know how to apply it, and we're going to do some live demos right now. We're going to show it on TradingView. Even if you don't know and how you visualize that, that single rule is going to change your win rate, your sizing, and your nervous system so that you're not fighting FOMO and fighting your discipline. Next 2 weeks, that can change a lot of the baggage that you might have been carrying for months or years. And that can produce some results that I want you guys to see for yourselves. All right. So now I'm going to teach you guys the framework I use to make those decisions every Sunday. You guys, some of you have heard the LVL many times. We're going to cover some more and specifically how it affects and influences the decisions that are made. And how this applies to this same uh, decision process that we just covered about where we're wrong, where we'll exit if the trade is worth taking, and then where we'll exit if we're right. All right. So there's three letters, and there's three decisions associated with this. And so most people, you know, with LVL, they'll sort of teach liquidity and validation, all these things like lines as a chart. What I want to teach it to you guys is the way that I actually use it and how I see it. And it's the three decisions that every trade requires, all right, and how it factors into the personal decisions that I'm making for myself. Where am I wrong? Is the trade worth taking? And where do I exit when I'm right? So firstly, where am I wrong? So I'm going to pull up a chart along here as well so that we can just go ahead and look at a few of these nice things. This is actually applicable, and I'm going to use some very recent examples so that this sticks and that you fully understand where I'm coming from with a lot of this, family. All right. And so the first thing I look for on the chart is not where to enter, it's where the market is going to prove me wrong. All right. So that's going to be at a swing high, swing low. So that's typically a previous day's high or low, right? Or a session open. So if price breaks through that level, it's going to render my thesis wrong. So when I come over, I'm going to share my chart here. Uh, So we had some really interesting movement lately with Mr. IWM. And so essentially what happened, if we'll sort of like play this back from earlier last week, we had something really nice happen on Thursday, actually. And so the first thing, as those who've been around, you guys know the answer, what we typically do first. We mark swing highs and swing lows, especially for the new folks. That's how we lay out every chart. That then first becomes these levels where we're deciding liquidity. These are where money is located, and that if we trade through any of these areas, it's where a lot of traders really fall flat on their face. And I've actually discussed this with one of my students here in our community. So, if I'm looking at IWM here and I see this is trading at all-time highs, I'm able to lay out that 301.50 is its all-time high. This is not just a level to me here, right? A lot of people would be expecting that if this breaks higher highs and goes beyond this, that's going to be their buy-in point because they're buying into strength. But what I actually think about this level is this is where I would be wrong because I'm actually looking for reversals. So if price trades through this area, I'm going to be wrong. This is where I would look for a stop loss, and I'm looking for this to pull back, right? So why this is decision one and not decision three? It's because if I don't know where I'm wrong, I can't size a trade, I can't set a stop, I actually can't calculate the reward. So everything depends on knowing this, all right? So what my expectation is when I see this is that I'm anticipating a reversal if this can uh, go and hit any of these components and trade right back through. And so the first thing we saw on and happened to IWM on excuse me, Wednesday. Well, no, this actually occurred on Thursday where we saw an opportunity, but started on Wednesday where we hit this invalidation point. We hit the level of liquidity, and that then led to a reversal, right? So if I recognize this and price trades back above and towards these levels, then that's where I'm wrong, right? If I go short on a trade, I'm expecting reversal back down. We go through here. That's going to be my validation point. That's going to be, where I exit my trade. And then so the second thing here is validating the trend. And so with validating the trend, this is how I have to understand if a trade is actually worth taking. So that's then aligning with my decisions here. So I don't want to predict direction, right? I want to check, is the structure and the movement of the chart agreeing with my thesis before I actually commit any money. All right. This can be applied through, this framework, or it could be utilized with double bottoms or uh, wedges or any type of those components that you might be using. I just want to reference this as an area for how to walk through these most important decisions, the three ones that we stated we have to make and we decide before trades even happen. And so the three things that I'm looking at are higher time frames pointing in the same direction as my entry time frame? Is the structure of price action confirming that move? And is there volume behind it? So if I come back over here to these charts, and by the way, if you have TradingView open, I asked some of you guys to bring TradingView with you. You can simply go to IWM. You type that there on your computer or on your phone or tablet, and you just hit enter, and that just brings you to the chart. So you guys will just see that this is where I'm following recent days of action using the hourly time frame and putting this as our North Star. So we have our where I'm wrong. As we're seeing this opportunity play out on this trade here, and this is IWM, we want this to possibly reverse back through the range and find previous lows, if that at least is the thesis that's being presented. What I want to check for then is our time frames uh, becoming red. Well, we have this red on the hour. The day here on Thursday started red. Well, that's giving me enough momentum to decide this can fall flat on its face. Is this making lower lows? Well, that's something that we'd have to see as it plays out. But this is then what determines how we're then getting closer to that decision of, is this trade worth taking? All right. If there aren't any figures of time frames working in favor here, if there aren't any components of, if there's no volume behind this move, and where IWM kind of typically always has volume in its way behind this move, I just wanted to I'm going to remove some of these indicators off the screen just for a moment, because I just really want us to focus here on the volume that increase as this started to drop down throughout this trading day. All right. And so that presented itself as we saw price reversing off of these previous highs and then retracing back through this range. And so I'm getting ahead of myself because the final thing that helps us determine our decision is understanding where is the reward and is this worth the risk. So just going to step back from a moment here. We already identified that, hey, there's previous lows that are located down here because the very first thing we did with this blue was identify the highs, the lows. We said with our liquidity, if we reverse off of that, that can be where we anticipate a reversal. but also that if we trade above that level, that is where we are wrong. So we solve that problem. But since we mark this previous low and this is trading back through this range, that is then where we actually got our answer for where our possible reward is. And that's all the way down here. So what happened recently in this trade was that we looked for a put on IWM. And with IWM, we laid out our trade just like this. And this is where the answering the questions and the decisions to make about where our reward and is this worth taking the risk is that our entry comes from the moment that we trade back through this range. Some people understand it as the moment we break below the shooter. Some of you guys, I wanted to leave that open. I didn't want to call it out because it's not exactly is essentially the process or strategy I'm using in this scenario. But I referenced for you guys that if you're coming in here with an existing strategy, I want you guys to improve your decision making specifically about how we're walking through this, right? This final piece about how we take this tool, which is over here by our toolbar, and it's the short position tool. And you would pick the long position if you're looking for a call, right? Or another component we're going to cover a bit later. But the short position tool is outlining the trade opportunity in front of us. All right. And so what we can acknowledge from this moment of entry to the target, this is the moment that we have our moment of truth. This is when we determine, after all of the pre-planning that we just did, is this trade actually worth the risk? So how we draw this drawing out with this tool is that we draw the red parts to where our risk and where we're wrong is, right? I kind of consolidated this just at the top of this swing high, right? And we draw the green areas to where we are right? Like where our target is. The final result is that it gives us our risk to reward ratio, as well as the possible opportunity for profit or loss. All right. And so those are the targets that I'm making. From this, it's simple math. By the time I've made these three decisions, the trade and executing it actually becomes more straightforward, but it becomes boring. There's not much else to figure out. So we mark these levels. We find the risk reward ratio. Ideally, we want this to be 2 to 1 or greater. And this scenario, this example we're using, it was not that great. However, it's greater than 1 at the very least. We don't want our odds for when we're making trades to be 50-50. We also don't want our odds to be such that we are looking for really small targets, but enabling the opportunity for loss to be really great. That's the major first component. And as I've taught many of my students, and especially the ones who we've worked with directly for 5 weeks back in May to June, this was a big component for the shift that enables students to finally understand what they were actually laying out in trading and visualizing this so that they aren't making those same mistakes based off of FOMO or revenge trading or overcomplicating anything. All of this I just demonstrated without any indicators. We'll get into indicators and their opportunity, but this is first giving you the identity to be able to make these decisions on your own without too much fluff in the middle of it. All right. So the second thing I want to bring here is about how we tie this back into options. All right. And so this is where most retail traders are making the wrong move. They can use this framework on the stock, they can get the setup right, and then they pick the wrong contract. They can still lose money on the trade that they were right about. So here's the shift. You are not buying an options contract, even though you are, right? But let's not think about we're buying a contract. You are buying proven value at a discount with a pre-mapped destination. Options, as many of us have experienced, they decay from session to session. Most options value look like a declining curve. But that actually can work directly into our benefit. From the moment that lightning starts to strike, and we're able to take advantage of those trades as they are becoming valuable to us. And so we understand like if we have a contract that closed yesterday at $1, they might open up at 20 cents today, right? Because if the stock moved over, the stock didn't move overnight, the theta, the time decay, it's going to happen, right? A lot of traders see the contract decay and they'll say, you know, there's, I'm just going to move on. That's a losing trade and it's not worth my time. But what I see, and what I challenge you guys to all see, is that because that contract was worth $1 yesterday, the market priced it at $1. We can have evidence that the market can be willing to pay that price again. That's what we're getting with that number, with the previous historical data of what was the contract value that before I saw it, right? That turns it into an opportunity that option can be available today at an 80% discount. So then the trade isn't, will the options contract go up? The trade becomes, can I get that contract back to where it was already valued while the underlying triggers an LVL setup, right? As we walk through those same decisions in the framework, right? So now the optimization becomes about how we apply our decisions to a contract itself. All right. And so I'm going to work with an actual trade I took today on a stock that quite a lot of us are familiar with. And that's going to be something exciting I'm really, wanting to bring to you guys. All right. So today, and now I didn't go live today. I didn't share anything I was doing today. I was preparing for today's class. But with this practice, I want to demonstrate that for you guys, I'm constantly teaching people live this overall process. And I want to frame this in the way of how we make decisions so that we improve at the decision level and not just about this huda hada in terms of the fanciness that kind of seems to happen with the indicators and things. We'll get there, right? It certainly it helps us become efficient. But this session today is about our decisions, all right? And so we're looking at this contract alone, right? I'm not going to show you guys. Well, I can, if you guys want to know what Robinhood looked like today, I'll actually pull that up really quick. Been testing out another portfolio here. So first and foremost, Robinhood went up just like this. It went up on Thursday, pulled back, but we had this increase in price, right? But how do we become more confident and really just set out to establish those boundaries for ourselves, for how we fit in? Because trading, and for us, it really becomes about how we fit in. How do we fit ourselves into the broader concepts of the market? There's millions of traders, hundreds of stocks. Okay, it's not about how do I make the perfect trade. It's really just how do I fit in a way that makes sense, that I feel comfortable, and I can repeat this regularly. I'm going to show you guys how I do that today. So Robinhood went up, right? What we can look at on Robinhood is we want to first think about where am I wrong, right? The three decisions again. Where am I wrong? Let me write these down for you guys. Where am I wrong? Is the trade worth taking? And then where is the reward? Is it worth the risk? So we're keep these in mind as we're walking through this trade here. So first, where am I wrong? Right? So we outline here on the actual options chart. Let me just show you guys what this options chart has looked like. It looks like this option was born sometime in May. It was born sometime in May. This increased in price, right? Then dropped, I guess, once Robinhood was falling, and actually got all the way back here. So this has already done some work, actually, of being in a discount and trading back to proven value, right? This has already done some work. But now today is a day where it does even more work. And why is that? Well, because we have a high and a low, and we're still trading in a discount currently, especially if Robinhood decides to go up. So what we do is we mark our high and our low. And so the very first thing that this stock, this contract does is that this hits a previous low. And so if this hits a previous low and reverses, well, now we have a level about where am I wrong? Okay, we hit this low, we bounce through. I'm wrong if Robinhood is going up and I can make a thesis about this. I'm wrong if this goes down like here, right? So that's where I'm starting with. And that's going to be where our placement of a loss is likely going to start and be. All right. Even though we haven't made any trade yet, we're just outlining that first. And so then, is this trade worth taking? We can validate if an option is ready to be traded. First, if it's trading back above a previous low, I mean, and we're currently seeing that happen now, or if that is reversing back through the range after hitting a low, from a high to a low here, the ones that we marked. If that is coming back into here between 8 and 25%. And I know that sounds very specific as a number, but that's truly what it is. So as I outline this here, this trade can become worth taking from the moment that we cross, let's say this 241 is currently at 215, right? It could be earlier than that, right? It could have been as soon as we bounced into here, but we have to make this make sense for ourselves. This trade, again, does not happen until we solve and answer all three of these questions. Where is the reward, right? And how do we validate the trend here? And let me just correct myself here, more so the trend. All right. And so where the reward is and can be on options contracts, it looks very similar to what it looks like when you're trading on a stock. Typically previous highs or halfway to the range or through the other side. So from this component, from this moment, we understand that, well, this option here itself can trade back to previous highs. That can be somewhere around 350, or that can be all the way across at 510. And so now the moment that we enter becomes the shift point to then answer all these three questions at once. So we determined where we're wrong. We determined where is the reward. We said that the trend can be validated if we cross 8 to 25% of this range. And so that moment will come here. All right, just marking that manually right there. These two levels. There's the 8% and the 25%. So now the last thing is to work with this long position tool for those who are walking along with me on TradingView. So we have our loss. Our entry level becomes, or excuse me, we can start to think about where we're entering based on that. So if it's right here and we're targeting a previous high right here, right? We see that as a possible 69% move. From this level, our risk to reward is 1.81, which is almost 2 to 1 from the distance of the reward to the loss here, right? And now I can adjust this if I want to, right? To get it closer, whether I'm going to drop to a smaller time frame here. I could make this to some other previous low that we just proved out, right? That then makes my risk reward a bit better, but I'd be understandably taking less risk here to target a high reward. But that's kind of the beauty of things, isn't it? Don't we want to take less risk for the opportunity for a big reward? This is then where our fine tuning comes into play. And at this moment, we actually can, I'm just going to demonstrate for you guys here. Going to demonstrate for you guys. We can, at that moment for where we define the boundaries, that's then what we just leave the trade to perform and do without any of our interaction. No more hesitation, no more being stressed during the trade and really stressed out. A lot of our decisions were decided before the trade, right? For all these components that handle our emotions, our outcomes, we know exactly how much money we can make, actually. We know that there's an opportunity for a 69% profit here. And in this case, whether that was a 16% loss or, earlier it was a greater loss if we took that larger space to allow for, more risk. But this gives us a huge advantage. At this point, you could actually see on the screen, it's a little tiny for some people if you're not able to see. I can try zooming in here. It shows us that our outcomes based on what I bought is either $3,000 of profit or $1,000 in loss, right? Having that awareness means that there's now going to be no surprises. I know exactly how much of my losses and actually had that space, and what becomes the homework for you all is determining what number that is. What is that number that you set out and you say that this is what I'm comfortable with trading and this is the loss. That is a specific monetary number first before it becomes a percentage number. People ask me all the time, what percentage stop loss should you set? Most of the time I answered 20%, blah, blah, blah. But what you'll learn is that there's 20% changes. If you're using different amounts of money in every trade, that's going to change. You're not going to know that, and then you're going to be surprised about what that number comes when the trade doesn't go your way. But how this presents itself is that we have a visual indicator, and now we have boundaries on our trade, such that as the trade produces and goes along, we just leave it to the market to produce. All right. And so now this is a bit of a switch and a change between the trade I actually ended up trading. My entry ended up being a bit closer up here at that 241 level, but we'll see how this ended up playing out. This may have gotten stopped out first, at least what I shared, right? So that's actually great that we actually get to demonstrate that. You actually see here this volume that comes in, that ends up being likely people who either are buying on the dip or also selling, panic selling at that moment. All right. Now, what becomes important is that we having that same boundary, having the same exact plan already for the trade set, this gives us better opportunity to be able to re-enter this trade if it goes ahead and re-triggers. And okay, so we do get that opportunity. This gives us space here. We actually get this volume spike now. This might have been when I entered. Use some of my own money here. And now, as you guys are recognizing this volume increasing as we're going along, we're still utilizing these same boundaries. We would set this like this with an auto take profit, with an auto stop loss, and that this still becomes a measure of automation at the end of the day. Now that we attempted another trade opportunity, we might lower the amount of risk that we actually put into this trade because we probably wouldn't be risking the same amount on that second trade, right? But as this is now moving in our direction, we could actually start to move our stop loss as this is going along, managing our risk, managing our way across the trade as it's moving along, right? And then this eventually essentially selling our trade out at that moment, right? But that is a huge component for anyone, and it's a lot of you who feel that hesitation, especially from the moment of being so scared of their stop, right? So scared of their stop that it prevents you from being able to take the trade that you actually planned ahead of time. And I want to bring this back forth as it positions through a lot of what we've talked about during this system here, is that the major issue that happens throughout a lot of our trades, through the components of what happens, what navigates how we're, what occurs during our trades, is that it's because of those emotions, those frustrations, those regrets that are occurring during the trade that it inhibits you from being able to move forward and take the opportunity. So many traders have talked to me about it, that they get stopped out and they watch the trade play out without them. But why? Why are you doing that? And then why is the decision then for you to not protect your bottom line or assess your risk? Because oftentimes the solution that people come up with is to either remove their stop entirely or to just not consider their risk at all. Because the idea is that the stop was the inhibitor to making money. And there's a component where, sure, there's other things to consider there. I've talked extensively with a lot of traders that, hey, you can trade without a stop, but in order to do that, you have to assess that risk, which we said was a monetary number. You have to have that in place. It's no exception. Sure, go ahead, don't have a stop loss, that's fine, but you need the risk assessed first. By having these decisions that we answered, that we have this laid out, this gives you control, not only with automating your trades, with auto entries and exits and more, but firmly with having better initiative as your rule book is playing out, and all you have to do is push when it actually activates. So many times, the regret, it eats you up and prohibits you from being able to move forward and take advantage of the next opportunity. And where I want you guys to start to think deeper and utilize this decision sheet. I know some people joined us a bit late as well. I'm going to drop this in the chat here so that you have the full on document and you study this over the next week. That is the major change to be able to assess this. All right. The final component, and there may have been questions here in chat about how do I identify or know to actually look at that option, is that I don't have to filter too hard on which option to buy, because that is another decision I have to consider. I can factor through there by seeing, what are the previous highs associated that I'm targeting, right? The target and determining that on the chart actually helps with picking an option. There could be 120 because that's a previous high that we're looking to get to. But what's here in the top right is the options optimization tool, right? Because options optimization is all about following that sequence of recognizing options in the discount and trading them back to a proven value. We're buying options in the discount, trading them back to proven value, right? And so one thing that this often assists me with, and it did so today with Robinhood, is that I can actually see the full-on options chain and see what are the best opportunities here, right? Who has the best volume? And this pointed out it's the 120 call. And this 120 was aiming to trade back to proven value. We started to see that when it was around $1.50 or under the $2.20 mark, right? We took an entry, at least in today's example. I didn't get stopped out today of my trade, but in today's example, I wanted to certainly show that so that you are able to familiarize why it's still important to have that drawing tool on the chart. But knowing exactly where that entry, that exit is, this puts it right in front of you. What are those best options to consider? It seems like the entire chain here was really great to look at, but it really showed that the 120 was the best opportunity in today's case. We also have that proven simply by if we're able to look deeply from the opportunity that presented itself, throughout today's trading day, was that through sorry guys, I'm trying to get this on par here. I think I keep marking the same level. Is that, this, oh, actually forgot that this actually ended up doing this twice, which is pretty cool and interesting. What we did manually was that we saw that this was a 60% move, right? I did more so the safer route, if you guys notice here today. The bigger route here that was presented was that this option, and we'll see how this goes ahead tomorrow, this option was saying that there was an opportunity for a 100% move to the upside. And so what this is additionally on this side is just making sure that all of these decisions are quick to make and also quick to calculate in any given scenario. That is really the purpose of, this tool. We talked about doing this manually first, and then now this is an indicator that essentially further automates the process of buying, selling, holding, and whatnot. And we'll see how this option at this time performs tomorrow. Because this is, I'm anticipating Robinhood to be a huge swing, be able to attain more heights as the Trump administration and more is involved. It's all this stuff regarding the stock there. But I just wanted to emphasize that such that that becomes a bit clear, especially as we're talking through these tickers and more. The other thing, I'm just gonna go over this quickly. This was another trade I took today, just to show you guys how I'm actively utilizing this same process, is that I'm able to get to the point of making a trade and entering pretty fast if it simply means that I'm following through on all of those components. I'm going to copy and paste these same questions here again, right? So first, identify high, low. I'm going to show you guys how quick I make trading decisions. Okay, where is the previous low? All right, it's down here. So if a stock's price trades back into a previous low and then trades back into a previous range, happens like this. Okay, that can be something I can work with. There's a previous high right there as well. And so now, where I come into play here is simply answering these questions. Where am I wrong? Well, if this trades back below this swing low back here, right? Is the trend validated? Well, that can happen if it crosses a quarter of this range or 8% of this range. And then where is the reward? Well, my targets are going to be here at $1.83 and 345. That would be absolutely beautiful. So then I can outline this trade opportunity simply like this, where there's the target there, or I'm going to shoot for the moon here, instead, to kind of contrast what we did there with Robinhood. So I can go ahead here, buy some good old contracts here, see how this starts playing out. Okay, we started out, we actually start trading in a loss. Do we? Oh, that was not the trade I took. So let me play this back one more time. I think I ended up getting an earlier entry. If you guys honestly want to know how I prefer to make some of these quick trades, especially with the shorter term expiration, I actually like to take them as I'm seeing like a proven moment. I typically am on the 5 or 1 minute time frame, and I like to see movement as it's moving away from this previous low. So typically at around this moment, as we are proving like, okay, we're literally getting back into this range after hitting a previous low, that's then answering my questions enough. At least if I keep my stop loss pretty tight, where I'm invalidated is down there, where my risk reward. All those decisions are made pretty much on the fly, and I can get a pretty good win out of this. All right. So for Amazon, my entry was around 41 today, actually. I guess I was pretty precise on that. And I was able to take this most of my position to 80. So I have a screenshot floating around somewhere here around that. But this was able to get to 180%. And now I'm taking this trade and we identified, hey, this can get all the way back to 345. I'm taking this off that opportunity. And we see that's a possible 600% move. That makes it clearer for me that this decision is solid, or that this is something that I want to consider further than something that feels not as grand or able to identify. I just want to maybe see if Amazon can show us if the options optimizer is going to show us anything there just for reference. So this did come up. If we see here, this 245, this did come up here on this level on the optimizer. We see that that had the most volume. And so that was just something to just consider there. Last thing, and before we transition and where I want you guys to do some homework, I'll give you guys some action items, is Tesla. Put T in chat today if you looked at Tesla, if you traded Tesla today, if any of those components. I stared down the Tesla 410 call. I didn't take it today. I'll be very honest. I'm not here to lie and pretend like, oh yeah, I was in on that and right. I Robinhood and Amazon paid pretty well for me today. But and they took most of my attention. But I was actively looking at this contract and I decided not to because I'm like, I'm actually pretty good with whatever I have. But this does factor into some regret, doesn't it? But one thing I say, once you guys lock in all of these tools for your decisions and you become more confident and more in tune as you decide, where am I wrong? What is my risk? Where is the target? Is the reward greater than the risk? All this becomes noise. You don't have regrets anymore because your ability to recognize opportunities becomes so much greater. But this is the same thing. Swing low, swing high up here. Where am I wrong? If this is below here, 175, right? We hit that previous low, we're bouncing back in. That means a reversal is possible. All right, what does that mean for me? That means that, okay, we could actually reverse back through this entire range. But also, I don't want to ignore any of these previous highs that exist back here. So we'll say $10, right? We'll say 490. I ended up recognizing this initially when this was around 240 or so. And I was like, it already moved once I saw it shoot up to $4. But what this then becomes is that, well, depending wherever I decide to enter, it doesn't have to be all the way up here at 725 or whatnot. That's kind of just a reference. But we recognize that there's an opportunity that this can go 250%, right? This can get at least half of this range or, at minimum, trade back to this previous high, get 30% profit. That's okay, I guess. But it's because the range and the opportunity for the reward to the risk that we can accurately see that making the decision to enter becomes so much clearer, right? And so the same factor applies when charting the options. And this did such a mega move, Tesla today. It again, it feels like regret because I saw some people definitely capture 900%, 500%, some really great moves. And the greatest part is that you're able to see it and make sense of it. You're able to see it and make sense of it, right? It's just about where is your execution at the end of the day. It comes in the pre-planning and comes into the settlement here. And I hope after 3 examples, guys, that I demonstrated, and I wasn't planning to go this long and have this many examples. I really wanted to emphasize because of all of the data and just kind of continue to provide proof of how much further you come along once you hone into not just about seeing a setup, right? But more so how it narrows down all of these components such that the decision becomes a bit simpler. It's not the complication that we've been doing for so much of our trading careers collectively, right? Does that make sense, everyone? Press 1 if all of this makes sense, and press 2 if you feel like you have more homework to do and you want to start taking action pretty soon. Press 3 if you want to have more sessions like this and if you want to work maybe further with me and talk through some of these things. All right. So I have something to share with you guys. And again, if you haven't gotten the PDF, I've dropped the link twice. Someone else can drop it, or else, I'll just share it with you guys via email afterwards. Um, and so again, I want us to buy proven value. All right. I want us to think about buying proven value, improving our decision making through the simplification and pre-planning of these processes. Or okie doke. And now there's another example here. So I've been working further with Jeremy here. And Jeremy, especially if you're here, I always want to just emphasize that there's a lot of effort in this about focusing in on the accomplishments that you've made through applying a lot of these systems. And so the very first part with improving decision making started with joining our challenge. When we hosted the challenge, we would just apply these systems for 7 days. And that assisted Jeremy himself with being able to turn one of the craziest returns I've actually seen in a period of time like this, where he was able to navigate specifically being able to scale from $500 to $7,000 in a 30 trading day period. And so that is one of the biggest goals is that you start to test and experiment on your decisions fast and small. All right. That is key and crucial because your decisions are going to be marred and impeded when you're trading larger amounts and not confident in what you're doing because you're looking to climb back, like we mentioned earlier, and make those decisions on the fly with loads of money on the line that you're not ready to do away with or prepared for what happens if you cross that line. All right. And so I've worked with Jeremy often. We worked directly during our challenge. We also worked offline as well to just talk through specifically how to overcome any of those issues when it came to copy trading or YouTube or kind of getting distracted by someone else's setups. And so typically how I prefer to work with traders is specifically making sure you guys have a risk model. We covered that today. So I want you guys to pat yourself on the back for attending. But not stopping there, I want to challenge you guys to actually go ahead and develop that risk model for yourselves now that you have the decision model and the decision PDF to work with. I also want you to determine and map out what is that process to actually do this consistently. And so when I'm working with traders, I'm rebuilding their risk models, giving feedback on that, and also helping to tighten entries surrounding what that predetermined risk limit is. Again, that's some homework for you guys. Determine that number, whether it's based on your own portfolio or if you're going to try to start and experiment with a new one. I recommend about $500 or less. It's all up to you. Some of you guys are richer than me, and some of you guys are starting out and wanting to test the waters here so that you're not taking big risks that are impeding you from being greater and getting to that step of the line. All right. And so that was all of the work that I was able to do. And Jeremy was able to take the lead, apply those concepts, take the advice, take the work, and then, be able to prove it as he was committed to actually running his own playbook. All right. And so, if you guys want to work further with me, next week, I am starting a full new challenge, myself and my team. I'm going to be starting with $500. This is a live challenge, and it's a different challenge from any of the ones you might have heard of, whether it's taking $500 to 100,000. That's not what this is. It's firmly about discipline and consistency and how to get to the level of consistency that you require with a permanent installation of the decision system. All right. And so that will be starting this Sunday, where everything that you saw, we talk about that regularly until you guys are able to tell us back what your risk limit is, what your entry levels are, how you determine where your entry is, your exit is, and more. That's what we hear from you every single day. All right. Let me just show you guys a bit first about the schedule and what that looks like. If this is something that you need just a bit further assistance with, essentially, we start every single day with talking through this system, understanding it from a broader view. But then we start to have conversations pre-market with you guys, specifically about what are you doing with this system? How are you going to apply this in today's trading? And then what stocks are you watching, and how are you going to determine answering those questions about where am I wrong? What is the validation? And then where is the reward? And then is this trade worth it? Then we work with you while the market's open. And then we review, come back to say, how did you do? What did you, and how did you apply those systems today? This is how then you change your behavior into the next day. And we do that on repeat until by the last day, we make sure everyone is set in stone with applying the concepts in those systems so that you're able to then come out a stronger trader. If that options optimizer with picking the best option is something you're interested in, that's also something we're throwing in. That's fully included as part of our challenge over those 7 days. That's something that is really something that we've heard a lot of great feedback from you all in terms of being better at picking options, knowing what expiration to pick, how to visualize that in any given trading day. That's just something for everyone here. If you are on here, we want to make sure is a part of this challenge and that you get full access to that. And so we want to make sure that you trade with a small amount. You're able to produce rewards for yourself through consistency and discipline. And then if you need some training wheels as well, you're able to see my trades directly. And also all the reasoning behind every single trade, as how we actually funnel into this to make sure your performance is on point. And how we review your performance is that you actually log into the platform, you connect your broker. This is one of my brokers here, as I'm showing here, and you connect your broker and you see your performance over the course of how to navigate your trades. So I was trying to pull up something here for the actual briefing. But essentially, we give you a briefing every day based on the broker that you connected. You also track every single trade, and that then assesses, are you capable of applying those trades in real time? And are you managing your system and your risk management effectively? What this will do is flag whether you are or aren't, and then we will give you that advice of how to pivot in the next direction based on visualizing all of those components so that this is not just guessing. This is all fully baked in for how to apply this in every single trading session. And additionally, if there's anything that I covered today, I want you guys to make sure that you also have the ability to walk through this. I'm going to drop another goodie here in chat. You have all of the resources, all of the tutorials and more to be able to learn this, apply this, and have the tools to understand what you're doing right and what you're doing wrong. And so that's between the optimizer, that's between having the system directly on your chart. And that's also with being able to review trades. I want to see if I can pull that up. This is the last class it wasn't able to. Okay, let's look at Amazon. So Amazon was here. So this was alerted actually by the dashboard system. Amazon was on here. It shows exactly when it was alerted. And now you can go back and review from the moment of the alert and the outcome of the trade just based on the system that's being applied. And so the first alert actually happened here a couple of days ago. There was also one that occurred today that kind of gave us the opportunity awareness there. And so you're able to go back in, review the trades as they're happening, and then just get those answers for you. All right. So this event we have a couple of times per quarter. This is all in EST. You guys can go ahead, go to the links in chat. If you go to any of these spaces here, the link to just see if this is something that you want to apply, and join the event. The tickets are available there. I'm also going to going to post in chat. If you are here on this session, we want to make sure that you guys get this opportunity for having stayed this long. I covered a lot of information. I wanted to make sure all of it was digestible and made sense and that you could carry this forward. And so if you guys go there, go to that link there in chat, and you use this code BOOSTER, we're going to give you and make sure that you have all of the resources to thrive during this period of time, and that you get access to all of these resources, including my time, my space of the trades that I'm taking and the guidance, so that you are able to improve your decision making and have those habits be permanent by July 18th, and that you guys can just start this new quarter, this new month, and the next 6 months of this year thriving successfully overall. And so beyond that, I want to make sure to give you all my thanks just for your time, as well as the privilege of being able to teach and demonstrate any of these concepts. I'm also on Twitter, I'm on Instagram in a lot of these cases. If you do have any questions here about the challenge, I'm available here as well. If there's just any follow-up questions, if you want to think about how much time commitment or what it looks like working with me and the team, and whatever other aspects there are in terms of being able to execute at a high level with improving your decision making across the board. Sessions for our kickoff is actually this Sunday. That session is being recorded, as well as our closing and our midpoint. Most of these sessions, it's very much important to arrive live. We can work on if they are recorded for review. But because of the nature of how we handle this, we want to make sure that you're getting the value live, such that those adjustments are actually happening in real time. Because it's not just a course, it's not just kind of going through and doing whatnot. This is all about real-time adjustment from your actual application of these concepts. And so the code, it gives you the access for during the challenge, as well as for that first month. And so you get access to that not only from the start of the challenge, you'll get access to it today, and that you get you could get to ask me follow-up questions on this platform itself. And we're also hosting specifically for anyone participating in the challenge this Friday for our recurring weekly session that we have on Fridays. So we actually showed what that looked like on Twitter on this past Thursday, simply because we didn't have a Friday because, of the holiday. And that's when we were able to capture that IWM trade, $9,000. We also caught that forget what other ticker, but we were able to make it out with a 15K day, which is pretty cool. So we have people actively trading with us on the platform at this point, and engaging on the challenge regularly. Um, and so, but that would be the what's available there. If you so be it, if that would be something you want to engage in, rather than wait for the challenge itself, you could actually get started with a lot of these systems to start improving your trading today. It's just more focused when we're actually able to be during the challenge and offering that time. We typically have about a 1 hour commitment per day. That's the most, or excuse me, that's the minimum, while the most is just however long we're trading every single day. And that typically evens out to over 30 hours during the entire challenge period itself. All right. So right now, we still have these tickets available. We just want to make sure that you guys have an opportunity to be able to participate if you want to. And so we want to make sure that when it comes to changing those decisions and how effective they are, that you have the systems needed to thrive and perform in that way. From our last challenge, we still have the leaderboards, and we have leaderboards that are actually updating every single week. Our last challenge, we had quite the outcome, which was pretty crazy from some of our top performers here. And so we had over 300% from Christopher Knoll. A lot of people in our community know him as Chris Buddy. And Chris, if I'm not mistaken, is going to be a captain during this period where we're also going to be able to exchange more information, work as a team. They're actually adopting these systems and more. But we had some really great outcomes, and it's not necessarily a promise of performance on the side of an increase in portfolio. We are working with that $500 or less. It's about the permanent shift of how we make decisions and how we improve our execution, which then drives those results. And so I'm really excited to be part of the $500 crew again. I'm kind of tired of working with some of these larger portfolios I've been trading with, recently. I'm kind of ready to scale and see how far I can get again with smaller accounts, and just how effective and how great it feels when you don't have too much pressure on your performance, and more so that the system's doing most of the work. And when you're able to see those outcomes, it really is a great feeling. And I just want to share that personally with you guys. And so, um, so typically someone asks how much is it, and just staying around just to make sure I can answer any question. So typically it's 297. For anyone who's here, it's 197 if that is something that you want to either split up or just get one and done right now. We have those options available as well, such that you can kind of just go ahead and uh, because we want to make sure that it's available and accessible, no matter whatever people's kind of areas are. So those can be split into 6 payments of 33, or just all at once, right? So that's essentially this opportunity that we want to just make available. This is going to be the last one we do here of this summer. So we just want to, make sure that's prioritized, and also just wanting to make sure that we are able to share myself, our team of traders, to dedicate that much time with live trading, answering questions, walking through the issues that you're facing, and then uncovering what those patterns may be that are inhibiting your trading, and then stripping that back so that we could just easily install the system into your decision making, and that's getting revised every single day from Sunday all the way until Saturday. So it's a really fun event. I'm really looking forward to anybody who goes ahead and tags along with us there. So I really want you guys to leave here feeling more stronger about your ability to overcome discretionary decay. That really is my goal at the end of any of these sessions. Um, as I continue to talk through charting contracts, as we continue to work through how to overcome any FOMO that you're facing, any revenge trading, and more, it's always going to start with how we approach our decisions. And so that is where you should be dedicating your time towards. Take the PDF that we had, do the homework of marking where your highs and lows are and whatnot to answer those specific questions. And that will be what you prioritize more than just that's what you will be prioritizing more than scrambling and spending so much time specifically on just the strategy. It's about the process and how effective you become at maintaining your decision health. Trust me, I'm behind that. And now you have some work to do um, to really become just better in what you do and how you apply it. All right. So if that's all the questions, so the brokers that are available, we have a full list actually. We have Schwab, TradeStation, Robinhood, Webull, Fidelity, Interactive Brokers. There's a full list listed somewhere. I just want to um, I'm going to share that if needed, if you want to follow up on that. Thinkorswim, not necessarily, but we do have Charles Schwab, which is connected to the same area. So hopefully that answers that question there. The recording to this session will be sent to you guys via email as soon as it is done saving. And it's also going to be posted to our YouTube. So keep that in mind if there's anything from today's session you want to go over and review. I will also be available in the Discord chat. If you are not currently part of the Discord, make sure that you drop in. It's completely free 99 if you are still new to our community, and we'll have further conversations there. We've actually been having some really great conversations like recently about charting the contracts and actually how to leverage some of this effectively. So if you go into the chat channel, you can kind of jump into the convo. Don't be shy. A lot of us in the community are ready to just go there and get to it with answering that question. Big shout outs to John, Brandon, Tracy, Tristan, Anthony, Tony, NJK, Gary, just incredible. John, and a lot of I'm missing a bunch of people, but I just want to really emphasize the community and how much it really means to us to continue to be part of this and how we work towards building greater traders and doing that through the power of each one teach one. All right. So any other questions, you can go to our community or just contact us at email. I'll be ready to answer that, or one of us on the team. I'm really grateful for you guys. I hope you guys have a great rest of your night, and looking forward to having those conversations and seeing you really soon. So let's lock in. Let's make this next 6 months some of the greatest trading that we've ever made, and how we handle those, improve those decisions. And let's get to work, family. Thanks, guys, for all of your time.